Muchas gracias, Fintechs América, por la invitación para hablar desde la Fintech, desde Singapur, donde yo vivo. Yo misma soy alemana nicaragüense y me es un gran placer estar aquí con ustedes. Hi, my name is Pauline Wray, the head of the Fintech Control Tower from the Boston Consulting Group and Expand Research out of our offices in Singapore. Thank you for inviting me, Fintech Americas, to speak about my adopted Asia and the developments of Fintech here. We end a year that no one could have imagined, which I often say has accelerated the shift towards an online society and existence, with financial services as one of the key pillars. About the Fintech Control Tower, we're also a little bit of a startup. The Fintech Control Tower is a BCG expander, a platform that ingests multiple sources of data and applies a proprietary taxonomy combined with a rigorous framework, resulting in a highly accurate and globally complete fintech database. We engage directly with financial institutions, regulators, industry stakeholders, and innovators as we strive to be at the forefront of the latest research and fintech trends. Fintechs have a competitive advantage in a world where everything is digital. Fintechs globally are already pivoting business models in response to changing needs. It can seem very overwhelming to think about how big and how quickly this space is becoming and moving. And so today I would like to share three of the key insights from the FCT. One, the first global investment into fintechs, especially during the pandemic, will quickly slice funding trends across business lines and products. Two, how that funding is distributed in Asia, sub-regions and products. And finally, digital challenger banks, and a little bit more on Singapore. Since the pandemic hit, we've been talking a lot about investment concerns into fintechs of all shapes and sizes. Investors asking themselves, will early stage funding be affected? Will bridge financing be enough to ride the crisis? Who is worth saving and who is not? Whilst there is still uncertainty, things are looking positive. The COVID-19 crisis sparked an unprecedented volatility, but in the first half of 2020, investments remained strong. As you can see here, with Q2 receiving 1.6 billion more funding than Q1 2020. Actually, not in here, but we just vetted and finalized the numbers. The last 2 quarters have been very positive. To say the least. Q2 2020 has registered the second highest quarter by funding, following Q2 that I just mentioned, with a total of 11.7 billion, mainly fueled by 30 mega rounds, investments of 150 million or more, representing 60% of total investment raised during that period. Fintechs operating, as you can see here, in the SME banking, corporate banking, insurance segments have shown the highest compound annual growth rate over the period second half of 2019 and first half of 2020, especially in products such as payments and accounts. A viable, very important, a viable fintech ecosystem needs the proliferation of startups which come up with new ideas and adopt new technologies. And we worry about startups as COVID has hit early stage investments. Again, however, and we just vetted those numbers, Q3 seed angel deals seen a small growth compared to Q1, Q2 2020. Actually similar to that of Q3 2019, which was a record year. Now, if we break it down by region, what we're able to say is that the underlying growth investments over the period first half of 2018 that you can see here and first half of 2020 in EMEA and the Americas, investors focused really on specific solutions. For example, SME banking, which actually through that period saw 147% rise, and insurance, which saw 120% rise. In APAC, interestingly, the substantial shift in investment over that same period, first half of 2018 and first half of 2020, as investment fell in East Asia, 73% drop, and a rise in both South Asia, mainly driven by India, 111% rise, and Southeast Asia, where I'm based, with a 350% rise. In fact, globally, emerging market economies like Thailand, Vietnam, and Brazil have been experiencing the fastest compound annual growth rates over period second half of 2019 and first half of 2020. So now back to Asia. Fintechs in APAC account for 30% of the global cumulative equity funding, having raised 87 billion, of which 73% is invested into fintechs competing with incumbents, but also competing with cash. Payments and lending fintechs have attracted the majority of the funding in APAC, driven really by opportunities to capture the region's high unbanked and underbanked population. Early innovators have evolved into large platforms like Unfinancial and Grab. So payments and lending and retail account fintechs clusters in the region are expected to further grow as more regulators push towards a cashless society to drive financial inclusion. If we really double click into the landscape here, we break it down into four. Let's start with China. Since 2019, fintech investments have slowed as a number of large Chinese fintechs exited. For example, Zonang, OneConnect, 360 Finance. In 2019, in the second half of 2019, the Chinese Central Bank initiated a 2019-2021 fintech development plan to strengthen the sector. In India, South Asia, India claimed the largest share of equity financing in both the second half of 2019 and the first half of 2020, really driven by a surge of investments in retail banking fintech, focusing on mobile payments. Now, Southeast Asia, we've seen a strong investment in the second half of 2019 and the first half of 2020, really driven by Singapore, which received the most funding on record in the first half of 2020. Really, again, driven by two main business lines, SME banking and real banking. Let's not forget Australasia as well. We've seen 150% rise throughout the period H1 2018 and H1 2020, especially to their digital challenger banks. In Southeast Asia, the interest, why the interest has picked up? The interest has really picked up because there is the countries are relatively low banking penetration and have really supported internet infrastructure where regulators are changing to drive financial inclusion through digitization. We've seen how early adopters of digitization like India and China have seen significant improvements in banking penetration. If we double click into these products, to these fintech products, we would see that, for example, payments, mobile payments, double click into them, and there are a number of products, including mobile wallets. Mature wallets are expanding in the region in Southeast Asia and are extending into additional financial services like insurance and lending. Southeast Asia wallet adoption grew as more countries pushed again, as I mentioned earlier, towards a cashless economy to drive financial inclusion. Another interesting one is lending. Especially once you double click into it, you have a number of products, of which credit scoring. Peer-to-peer lending slowed down, as many of you would know. Chinese regulators cracked down on peer-to-peer platforms using investors, and by the end of 2018, over 30% of players closed down. However, alternative credit scoring solutions gained traction as more players moved into financing the underbanked. Now, I'd like to bring you to Singapore, where I'm based. Singapore has seen quite a large amount, has attracted a large amount of the funding in Southeast Asia. Now, the rise of investment is because fintechs view Singapore as a strategic gateway to the region due to the availability of capital, favorable business environment, strong technology, and banking talent pool. And for the upcoming digital banking license, a robust license application and vetting process provided successful applicants a credibility brand premium. So while the Singapore market alone is relatively small, the large underbanked and unbanked population in the region is a huge opportunity. Also, with an emerging middle class and a young digitally engaged demographic, neighboring countries are an attractive market for digital services. Now, Asia Fintechs and enabling regulations, but also digital challenger banks. I can't really leave this conversation without saying a word about digital challenger banks. We've seen a 200% increase in number of digital challenger banks since 2015. Growth in part encouraged by regulators introducing digital bank related policies. Enabling regulations have emerged in Southeast Asia and have implications on fintechs and digital challenger banks. Singapore, Malaysia, and really leading the pack and have adopted a wide range of activity-based and digital enabling regulations. On the other hand, Philippines, Indonesia, Vietnam have more recently begun adopting similar regulations. Interesting to note, however, in APAC, we've seen a higher presence of non-financial services institutions and consortium-led challenger banks, many of whom are ecosystem players or super apps. We see this model coming to the region as applicants in Singapore are telcos, are from a telco background, e-commerce players, ride-sharing, super apps, online media, gaming, retailers, and we really believe that these consortiums can bring a strong combined value proposition to the banking landscape in Singapore and beyond, of course, as they will bring access to customers, access to SMEs, digital users who are frequent users as well, and that interaction and richness of data. The opportunity in Southeast Asia is great as the market really is set to grow rapidly. The GDP for major countries in Southeast Asia, Indonesia, Malaysia, the Philippines, Singapore, and Thailand could reach 4.3 trillion by 2030, which would make it the 6th largest economy bloc in terms of population. And in terms of population, it would mean the 4th largest bloc. It's forecasted to go to 542 million people by 2030, behind the EU, India, and China. Banking penetration in Southeast Asia is still very low, like in Vietnam, the Philippines, and Indonesia, where more than 50% still don't have access to financial services. But mobile internet in enabling is really enabling more and more access to financial services. Again, the number of smartphone units sold in Southeast Asia annually is expected to hit 114 million by 2022, with the largest increase in Indonesia. As a result, we really see the opportunity here for we see a great opportunity for the future of banking in Southeast Asia and a thriving fintech ecosystem. So to finish, the COVID-19 crisis has had a varied impact on the fintech ecosystem moving forward. There are still immediate challenges, medium-term big challenges, but there are also many opportunities. Thank you, and I hope you enjoy the rest of the conference. I know I will be plugged into a number of the fireside chats, and I'm looking forward to maybe seeing you one day in Latin America. Thank you.